We are live, and today we're gonna talk about a very important topic. What is it about Bitcoin that makes it so special that even governments, even the U.S. governments, are trying to bend it? We're gonna discuss about all that coming up after the intro.
Hey, yeah. It's all about wealth engineering. Might be something that you're not used to. It's okay, cause I'm here to introduce you to concepts. Time to grow and make big moves. All about crypto, come see. Stocks in business, yes indeed. Got the info that you need. Hosted by my homie JC. Hey, yeah. Wealth engineering. Stacking and stacking it up. It's time to generate wealth. Till you living like Scrooge McDuck. Hey, wealth engineering. It's time to show you the game. Till you living like Richie Rich. Till you ballin' like Bruce Wayne. Hey, you ain't gotta be an expert, no problem. It don't really matter where you at, just start it. It'll take time, hard work, and
What's up, guys? This is JC, and welcome to the Wealth Engineering Podcast. This is where I create content so that you can learn how to make, keep, and multiply money for the purpose of generational wealth or also increasing your net worth, right? Retiring early. If these are things that are interesting you, make sure you hit the like button, subscribe, and click the bell. Now, today we're going to have a very important topic to discuss, and it's about what is it about Bitcoin, specifically about Bitcoin, that makes governments around the world tremble, right? We discuss a lot about currencies. We discuss about the rise and fall of empires and how that can impact our portfolio, the uncontrollable forces that can affect our wealth. And sometimes government can take measures, especially when it comes to cryptocurrencies. It's a new market, and they can take measures in a way that could affect us in a short term, but in the long term, your cryptocurrency, especially like Bitcoin, can be in a place where it's operating on its own. It has a life on its own, and it does not necessarily need regulation. But with that said, you never know. There is always nothing in this world is has zero risk. So we're going to talk about that as well. And one of the ways I wanted to bring that conversation up front is to talk about what one of very good investors, Michael Saylor. He had an interview with the valuetainment team, and I think this video alone is a great way to start this discussion. There's many things that we can discuss in regards to this interview, so we're gonna tackle it, and I'm going to react on this video today. And throughout this reaction, you're going to be sharing, and I'll be sharing also my point of view, and we're going to bring some interesting conversation to the topic. And it's not necessarily only going to be about the government controlling crypto. It's more about what is crypto. What is crypto at its core? There is fundamentals that we can learn from this interview about crypto as a whole, especially about like Bitcoin and how it works and the dynamics and how it could impact the world in the next 10, 15, 20 years. Michael Saylor, he brings a level of psychology into the investing world from a perspective of an institution, right? Institutions, financial institution, they are basically entities that operates longer than a lifetime of a person. So whoever is ruling this empire, they have to build it in a way that they can always sustain the growth and utility of this financial institution after someone else's lifetime. So if I'm a CEO of a financial institution, I have to think beyond my lifetime and how to operate that over and over and make sure people get value on the service I'm offering. So Michael Saylor is that type of man, and that's why I wanted to react to this interview that he did. But before we start, let me pay my tribute to before the billion. Salute JC, salute to you as well. It was nice hanging out with you yesterday, and make sure you check out like a Life or Death series, guys. This is an Emmy Award winner, Frank Godin, that is doing some amazing work out there. So make sure you check it out. And Before the Billion was starring as an actor in the last episode. So make sure you check it out. Also, Peter Investor M, thank you very much for being here, always here, supporting the channel as a member. Thank you very much. And let's get into it, guys. So again, today we're going to talk about I know we're talking about like why Biden is so scared about cryptocurrencies and try to control it by any cost necessary. He's taking last week there was a news release that he's taking steps towards regulating cryptocurrencies. This could be a good thing. It could also be a bad thing. It depends on how government decide to play it out. But I'm going to bring you someone on the panel, well, not necessarily directly on the panel, but we're going to react to his videos, and that's going to give you a perspective that we never heard before. Most people did not hear that before, and it's a key component in how money works, and that's why I want to bring it. So very quickly before I start reacting to the videos, I wanted to go over this news piece right here to set the tone. Biden takes steps towards regulating cryptocurrencies. The president signed an executive order that will coordinate efforts among financial regulators to better understand the risk and opportunities presented by the digital assets. Now, here is the question that's going to set the tone for the night. Right? It when they say understand the risk from the perspective of the president, what risk are they talking about? All right. What risk are they talking about? What do they mean by risk? Now, if you guys remember, we talked about that a couple streams ago when we were talking about what um, President Nixon did, right? He had to cut ties with gold so that it could preserve the U.S. sovereignty and also the ability to continue provide money to the world, printing money at the repetitions. But remember, the U.S. was the reserve currency. They need to have a certain level of stability in the world so that the world can continue to use that money, right? But hey, if it's tied to gold and they're printing it 12 to 1, meaning 12 times the currency that is in circulation as compared to the amount of gold in the Fort Knox or in reserves, then it doesn't really make sense to redeem your dollar for gold if there is more dollars than there are golds in reserve, right? So they cut tie. But remember what he said, and remember we talked about that in the stream. Remember what he said when he was making the speech, right? He was talking about national security. He was talking about the stability of the economy, and that's when I'm asking you the same question again. When Biden is making executive orders to understand the risk and opportunities presented by digital assets, my question to you is what risk would cryptocurrencies like Bitcoin be for the government? Well, it could undermine the strength of the US dollar, which is currently the world reserve currency, which is where the U.S. is getting all the power that they have and manipulate around the world. Right now, here's the other part: opportunities. What opportunities would that give to the U.S. government? Well, we're talking about opportunities like central bank digital currencies that can automatically be taken from your account for tax purpose, or if they don't agree with what you're saying, they can turn off your wallet, right? That's definitely how what governments like obedient people. So that could be an opportunity for the government. Who knows, right? We don't necessarily say that's exactly what Biden is taking, but hey, 4 years down the line, there might be someone else who have a different perspective. And the thing is, cryptocurrencies will offer them many different room to grow. So that's basically where I wanted to start the conversation in. But I wanted also to play this video right here. This is a very long video. I'm gonna play it around 1.5 speed, and I'm not going to play everything, just some segment that we can go out there and discuss. And we're going to do that as well. And then very quickly, I wanted to say salute lashes, salute. Thank you for being here. And let's get into it, guys. So this is again a podcast that I love a lot. Patrick Bet David is talking to Michael Saylor. So we're going to learn who Michael Saylor is, what he does, and try to understand his perspective and what he has to bring to the conversation. Let's get into it.
this the first time we got a billionaire in the vault, Michael Saylor. For some of you guys that don't know his story, I'll kind of set him up and we'll get right into it. Get your pens ready, get your papers ready, get your mind ready. It's about to go for a workout the next 2 hours. I promise you. And for some of you guys that maybe still have doubts of cryptocurrency or maybe even Bitcoin, this man may change your mind. Here's why. MIT grad. He is the CEO and founder of MicroStrategy, nearly 2,000 employees. They started in '89 when public.
MIT grad. So right then and there, you know that you're talking with a smart guy, and the way that he approached his philosophy on how he thinks about it, he actually thinks about it very much like an engineer. So I'm not surprised to hear that he's an MIT grad, but I'm surprised he managed to be so rich and is actually going to learn how rich he is. So So MicroStrategy owns over 100,000 Bitcoins, which is what, over 40,000 each. So we're talking about a lot of money, guys. Oh Lord, like when are we going to get that much money, right? So the thing is, he's managing other people's money, right? That basically means $4 billion in Bitcoin alone. So that's mean to say that he's bullish in Bitcoin is an understatement. He's betting a lot on Bitcoins. And throughout this interview, we're going to understand why. Salute GC, salute Need Watches. Congrats on reaching 500 subs. Well deserved. Thank you very much for being here. And Peter Investor M, is digital currency or crypto will disrupt the dollars? Um I think it's not necessarily that crypto will disrupt. It's like crypto will continue doing what they do best, but then the dollar is going to crash. So relative to the dollar, you might say crypto is disrupting the dollar, but in reality, it's just the dollars that's going to crash as opposed to Bitcoin disrupting it. You see what I'm saying? But it's the end result is the same. The end result is the same, and let's get into it, guys. So, and very interesting point, right? Smart guy, lots of money in Bitcoins. He's very bullish. He's putting his money, not is just his own money, but his investors' money, his company's money into Bitcoin as well. So we're going trying to understand why. Why did he put that much money on Bitcoin? Now, before he starts answering this question, I actually don't think I won't even play that full question because it's going to drag in too long. But I'm going to push it further. But I want you to guys understand this. He basically started in cryptocurrencies in 2020. We're talking about 2 years ago, March March 15, basically, when the lockdown happened. That's when he started jumping into cryptocurrencies. So now he has a very, like, imagine now he puts $4 billion and he's basically only 2 years in cryptocurrencies, and he put $4 billion on Bitcoin alone. Right, we're going to come back to this point because this is going to be a factor in the discussion we're going to have today. Because although I agree with 99.9% of what he says, there is still there is still more than 1% that I disagree on what he said. Not 99%, there is about 1% that I disagree with, and it's his level of confidence in cryptocurrencies, especially Bitcoin, is a bit too much for me. Is a bit too optimistic. There is a factor of error that is not factoring, and Pat David is going to challenge him on that later. We're going to see that, and he's not going to answer it very directly. But I wanted to bring that to your attention because although so far his explanation of Bitcoin I actually learned from this interview as well. Even though I've been in cryptocurrencies for a while, I learned from this interview. There are many things I knew, but there is something that he said, and I'm going to share that with you as well, on how he perceived cryptocurrencies and Bitcoin that I think we should bring to the conversation. So I agree with a lot of what he says, but there is one thing I disagree in, and then we're going to get into that as the interview goes in. But shout out to Cashflow Hunter. They just want to keep control of their damn taxes. Let's get into it. I know. But hey, we're gonna have this conversation. So let me move this a little bit ahead, around 7 minutes. I'm gonna skip the big intro that he's going to have, and let's put it around there and see what he has to say. There you go. And also, I'm playing this at the 1.5 speed because it's kind of like we need to get into it. And then he talks a little bit slow. Pat David talks a slight normal, but since he's going to do most of the talking, 1.5 speed, you can still hear it. If you have any issues, let me know and I'll adjust the volume or I'll adjust the speed. Let me know in the comment section. All right, let's get into it. Very quickly, I just wanted to drop that in. When he's talking about like his investors' money, right? That's his job. Is as his company, MicroStrategy, he manage other people's money. So that's these people are investing in institutions, right? These institutions, he has the right to choose which is the best investment for the people that he's investing, and he's deciding based on real estate, right? Based on collectibles, based on all types of stocks, real estate. What's the best way to protect himself from inflation, right? We talk about the inflation and why is that going to be a big problem, especially um, after cryptocurrencies have oh no, sorry about that. I thank you very much for letting me know, Mr. Cashflow Hunter. No sound. Oh, I thought the whole time I was playing it, but it seems that let me know if it works now.
Where the money is losing 15, 20, 25% of its value a year, and you're sitting in all cash instruments. You're losing
Let me
15,
know.
20, 25% of its value a year, and you're sitting in all cash instruments.
Let me know if that's okay. But I also, guys, you can watch the whole interview. I have the link in the description below. You could check it out. Thank you very much for checking it. But basically, in case you missed it in the beginning, it was talking about, you put a lot of money in, but they were asking him as a MIT grad that, hey, why are you so confident into cryptocurrencies? And then now we're diving towards basically why his philosophy, why. But he has a company called MicroStrategy, and also he's going to dive deeper on why he has to factor investors' money and where he has to allocate that. And that's the answer he's answering.
You either need to give the money back to the shareholders or you need to invest it in some scarce desirable asset. So the reason I did what I did at MicroStrategy was, if I gave the $500 million back to the shareholders, that was $60 a share. The stock was $120 a share. I basically was valued at 1 times revenue plus the cash. When I gave the money back to the shareholders, the stock was going to go to $60 a share. When that happened, all my employee stock options were going to be underwater, right? And we were going to get beat to death by Amazon, Apple, Facebook, and Google. Who's going to steal all our employees when the stock crashed. And that would mean that instead of growing 5 or 10% a year, I was going to be shrinking 5 or 10% a year. Instead of my cash flows doubling or tripling, they were going to be cut to zero. And once your revenues start falling, your cash flows go to zero, you have no capital, all your employees quit. When your employees quit, company unwinds, we're going to go to zero. So giving the cash back to the shareholders was a fast death. Holding the cash at 0% interest when it was losing 20% of its value a year was a slow death. Doing something was the alternative. And
so very quickly, when you're talking about holding the cash and it losing 20% of its value, now that is the right way of evaluating inflation, right? Because government tells us that, hey, inflation right now is about 7%, right? Rose to 7%. It used to be 2%, 3%, and slowly rising, but that's not true. If you actually in the real world, you realize that, hey, look at gas these days, right? Gas is definitely not rising at a 7% rate, right? Is it? Almost double. So when you factor gas, rent, foods, everything rising, So I like that you was mentioning 20% of its value, and that's a year, guys. That's a year. That's not in like over a decade. Now he's talking also about a large amount of money. We're talking about billions of dollars of investors' money. So 20% of $1 billion is a lot of money. And as an investor, as a hedge fund manager, you kind of want to make sure your investors are not losing money, they're actually making money. So that's where he's factoring all types of investing and realize what is the best route for him to put that money in.
We decided to do something, which is invest the money in a property or in an asset that would go up faster than the rate at which the money was collapsing. And that set us on a search, and we considered buying a portfolio of scarce art. I thought about 500 million worth of real estate.
Really, you thought about buying art?
Yeah, I thought everything. Do you buy gold? Do you buy art? Do you buy real estate? Do you buy a portfolio of stocks? Do you
So
buy
you're going through
some
an array of
crypto
different
asset?
options before you settled on Bitcoin. You were thinking art, you're thinking real estate, you're thinking anything other than cash.
Everything. In fact, we put out a press release to our entire shareholder base when the stock's 120, and you can go read it today. It said, over the next 12 months, we're going to buy back $250 million worth of our stock, and we're going to invest $250 million worth of our treasury assets in some asset in order to avoid inflation. And we listed a litany of these things, and we included Bitcoin as one of the things we're evaluating. Ultimately, so we went from first principles. We said, you have a bunch of money, and I'll tell you why we said we're going to buy back $250 million of our stock in a second. But you have
All right. So you mentioned something very quickly about we went from first principle. So what is first principle? Something that scientists, engineers, they think about. So a first principle is a basic proposition or assumption that cannot be deduced from any other proposition or assumption. Well, it's basically a way to approach it from a scientist perspective, as opposed to assume things will be good or not good, right? It's kind of like going over facts versus things that you think will happen, not to keep it super simple, right? Then you can have many different applications. But when he's saying that he went from first principle, and I'm going to replay that, try to understand that, okay, he's not necessarily going on assumption, he's going more on data and facts, and how's that going to impact the results that he's seeing.
a bunch of money. So they took a bunch of money, and I'll tell you why.
Sorry, that is getting into it.
Some asset in order to avoid inflation. And we listed a litany of these things, and we included Bitcoin as one of the things we're evaluating. Ultimately, so we went from first principles. We said, you have a bunch of money, and I'll tell you why we said we're going to buy back $250 million of our stock in a second. But you have a bunch of money, say $250 million. You want to hold it for 100 years, give it to your great-grandchildren. Where do you invest it? Well, if you put it into the dollar is losing, at least it's been losing 7 to 10% of its value a year for 100 years. That means over the course of 100 years, the dollar loses 99% of its value. My house in Miami Beach was purchased for $100,000 in 1930. Okay, I bought it for $14 million
This is the
in
villa.
2012. Today, so 100,000 to 50 million in less than 100 years. That's not the house getting more valuable. That's the currency getting less
So
valuable.
then he's the 200 million.
Again, that's just another way of explaining the same thing we've been talking about. Look at that, 11:11 on the time right there. But yeah, guys, very interesting point. Right now, I like the way he thinks about it, because we often discuss about this in this channel, generational wealth. When we talk about generational wealth, what are we talking about here? We're talking about holding your money, preserve the purchase power over a long period of time, even beyond your debt, so that your legacy can inherit full purchase power, right? Now, imagine you're the house, for example. If the house is acquiring value over all these years, then it's not a cash that is losing its value. For $100,000 in 1930s would have been equal to basically $14 million in 2020. So that's a lot of appreciation over time, but at the same time, it shows you the power of inflation and how it can add up in a long term. As you are a long-term investors, you need to factor that in also, right? You need to factor that what is the valuation that you get. And shout out to Cashflow Hunter. Let me see. I think that we have to think about getting some gold. Yes, I agree with you. I agree with you. Me, I have a different perspective when it comes to gold versus cryptocurrencies, especially in this. It will come up in this conversation as well. But I think short term, medium term, even within this decade, it's not a bad idea. Me personally, I love to have my. Uh, I need to be able to trust a custodian place that can hold my gold, transfer my gold into a different country if I need to, and give me a way to spend that gold with a card, right? That's the way I would love to spend it. I had a great company, Gold Money, but I can't. They stopped this feature, and I can't find another substitute that is as good as I had it with Gold Money. So that's kind of why I'm slowing down on gold. But I need to get back into it this year for sure. I agree with you. And then I like the position you have with PAX, right? PAX is a good alternative. We combine the the all the features of cryptocurrencies, and you can redeem your cryptocurrencies by gold, true store value over time that has been tested over and over again as insurance just in case. I agree with you. I wouldn't disagree with that point as well. But let's get into it and see what he has to say.
Billion. 100 years from now, they use
Nothing.
$2 million.
Okay, if you took any amount of money, take $100 million in the year 1900 and invested in any currency in the world, you would have lost 100% of your money in every currency except for the dollar or maybe the pound. Every currency collapsed. The winner of every war in the 20th century was the United States. And so the winning currency loses 99.5% of its value. Everybody else, you lose everything. Now, if you put that money in gold, there's a 95%
Very good point. We talk about the rise and fall of empires, right? And every war, and he was going to bring that point later also. Wars. One of the effects of war is the currency devaluation. And now, how does that happen? War requires government to print more money, which in turns devalue the existing money that was already printed, right? So that's basically what he's mentioning here. And he's saying that the reason why it's not 100% is because of the world reserve. If the US dollar is the world reserve backed by petrol, by oil, then there is still some value attached to it, whereas all the other currencies, they don't have that feature, so they all goes to zero. So that's basically what he's saying here. Very good point.
chance it would have been seized in the 100 years, because there's only a couple cities on earth, maybe Zurich or Geneva, where you wouldn't have had it stolen, and maybe then they still would have stolen it, if you were the wrong citizen in the wrong country. If you were a Swiss citizen in Switzerland for the 100 years, you might have kept gold. But Churchill seized the gold, Roosevelt seized the gold. If you lived in Germany, you would have had your gold seized multiple times. In Japan, they lost it 2 or 3 times. In Russia, count the number of times. So there's nowhere on earth where you could have kept your gold, and now you're stuck with, okay, well, where do you invest it? Land. Take $100 million worth of money and buy land in Florida. Tax bill is $2 million a year. If you buy property in Florida, it's 2% property tax a year. It gets assessed up every year. You have the ownership of the land for about 20 years before the government takes it back from you. You don't own your
Plus the
your
maintenance
property
of the land.
Yeah, plus the maintenance. So if you want to move money through time, how do you do it? You can't do it with a currency. The money is broken. The money was always broken. It's been broken for 100 years, losing 7 to 10% of its value. But in hyperinflating economies like Venezuela, Argentina, fill in the blank, the money loses 20, 30, 40% of its value a year, sometimes 80% of its value a year. In that case, you can't even carry money for a decade. You might not be able to hold money for a year in those economies. The Russian ruble has lost 35% of its value in the past few weeks. Right? That's how fast it collapses. So fundamentally, we have this issue. I want to.
Very good point, guys. Very good point. It's let me let me refresh that. But very good point, guys. Is he brought so much gem here. Like you were talking about gold, right? We were talking about gold, and we were talking about has gold could be a good insurance, and that's what I mean by gold is a good way to play the game in a short term, right? But there is a problem with gold, and me the way I think is I don't think necessarily short term. I think long term, right? And I like to think of if I'm buying an asset today, who's going to benefit from that, right? Who will want to buy this asset from me if I'm buying it long term, right? Now, one thing you can say is if you buy gold now, the people that are going to buy it from you are kind of like Generation Z, right? That would be a great way to put it. Generational Z, they might love, they might want to buy it from you, but are they going to find the same value that you found on gold? Are they going to see that as well 10, 15, 20 years from now, right? And from that perspective, it makes you wonder. This is the social media generation. This is the how do you call it? The metaverse generation, right? They might find more values in gold. Sorry, they might find more values in digital gold as they would find in physical gold, right? So me, just from that demographic alone, I understand what he's saying. But he also brought up a very good point. moving money through space and time, right? And he's saying that gold does not have this feature. It does not have the feature of be able to move it and from space and time. Now, one reason why I loved Gold Money, the company that I was using to get my service from and to buy my gold, store my gold, move my gold, it's because although on the back end they were doing that, me physically, all I see is I have a credit card attached to my gold account that I can spend. And then them on the back end, they manage the physical transactions and moving the gold from one location to another without me having to do anything, right? So they also make the conversion from fiat to gold on their exchange that I don't have to do anything, right? So from that perspective, to me, it's like okay, it makes sense. It's kind of like this futuristic aspect of it, right? This modern aspect of it without having to deal with the inconvenience of storing my gold, worried about someone coming and breaking off my house to steal my gold bar. And then at that point, most of my wealth is gone if I store my wealth in gold, right? I would like it to have an insurance in it. I'm using just a card. I can replace the card if I want to. The physical gold that I own is stored somewhere else. And from that perspective, I think there's a good point that he brought up here. Let me share the screen again, and we're going to continue with this. But I notice. Let me also get back to the comment section. All right, all right. I see. Live in a Ascend. Very great channel. Very great YouTube channel, sir. Keep up with the good work. Make sure you subscribe, guys, as you're listening to this. Sup, fam. Just came here to say hello and show my support. Can't stay, but I wanted to make sure I pay my respect. Thank you very much. Well appreciated. And guys, let's get into the video, guys.
The currency getting less
So that
valuable.
means the 200 million 100 years from now is
Oh, let me
Nothing.
see.
$2 million.
I don't think you guys
Okay, if you
can
took a-
still hear. I made some changes. Give me a second. Give me a second. Struggle streaming already. That's what my mentor would say. Yeah, give me a second. We're gonna get to it, guys. We're gonna get to it. But very good point that he brought up about gold, and let's get into it.
If you took any amount of money, take $100 million in the year 1900 and invested in any currency in the world, you would have lost 100% of your money in every currency except for the dollar or maybe the pound. Every currency collapsed. The winner of every war in the 20th century was the United States. And so the winning currency loses 99.5% of its value. Everybody else, you lose everything. Now, if you put that money in gold, there's a 95% chance it would have been seized in the 100 years because there's only a couple of cities on earth, maybe Zurich or Geneva, where you wouldn't have had it stolen. And maybe then they still would have stolen it, if you were the wrong citizen.
Now, very good point. 95% that your gold would have been seized. Very key point, because now we're talking about cryptocurrencies, we're talking about crypto regulation. At some point, we might even talking about Bitcoin seizures. Who knows? But it will be much harder to do that with Bitcoin than it would be with gold, right? So very, very key point. But now gold is widely adopted. But there was a time governments was against it, and they was seizing your gold, right? So very key point.
In the wrong country. If you were a Swiss citizen in Switzerland for the 100 years, you might have kept gold. But Churchill seized the gold. Roosevelt seized the gold. If you lived in Germany, you would have had your gold seized multiple times. In Japan, they lost it 2 or 3 times. In Russia, count the number of times. So there's nowhere on earth where you could have kept your gold. And now you're stuck with, okay, well, where do you invest it? Land? Take $100 million worth of money and buy land in Florida. Tax bill is $2 million a year. If you buy property in Florida, it's 2% property tax a year. It gets assessed up every year. You have the ownership of the land for about 20 years before the government takes it back from you. You don't own your
Plus the
your
maintenance
property.
of the land.
Yeah, plus the maintenance. So if you want to move money through time, how do you do it? You can't do it with the currency. The money is broken. The money was always broken. It's been broken for 100 years, losing 7 to 10% of its value. But
now here's the point. He's not really talking about money, is he? Money, because real money doesn't lose its value to time. It's a store of value. It keeps its value over time, right? It's not even gaining more value. It just keeps the value over time. Shout out to Live in Ascend. Love the topic on gold. Absolutely. Thank you very much. And yes, guys, but he's talking about currencies. The currencies lose its value 7 percent year over year, or maybe 2%, 3%, however you want to count it. But it's losing its value year over year, and then when we have war situation, it's losing its value way more, and that's how we feel it with inflation. Oh, sorry, give me a second.
Hyperinflating economies like Venezuela, Argentina, fill in the blank, the money loses 20, 30, 40% of its value a year, sometimes 80% of its value a year. In that case, you can't even carry money for a decade. You might not be able to hold money for a year in those economies. The Russian ruble has lost 35% of its value in the past few weeks. Right? That's how
35% of its value in few weeks. And you guys notice the market was going so bad in Russia that they didn't even open the stock market. This is how bad it was. It was crashing the ruble. Well, you hear what happened, right? It's legal tender. It's whatever people assign its value to be. It's not really backed by gold. It's not really backed by something physical. It's not a true form of money. It's a currency, right? Back then, currency was tied to money, not anymore. And that's why now there is a huge difference between currencies and money, despite so many similarities. The one key difference is store of value for money versus currencies is designed to lose its value over time.
fast it collapses. So fundamentally, we have this issue. I want to move money through time. I have a 100-year time frame. I'm an institution. The whole point is institution is supposed to go on, right? And so how do you do it? No currency will work. Can you use gold? Well, gold as money is the best idea humanity had for like 5,000 years, but it's not a perfected idea. The problem with gold is gold miners produce 2% more gold a year. Okay, that's no better than the state of Florida seizing 2% of your property a year in a property tax. The half-life of gold, therefore, becomes about 30 years. You divide 2% into 70, in 35 years, your money's cut in half. Hold it for 100 years.
Yeah, and this guy is really taking about a long-term perspective, whole as an institution. But that's what I wanted to bring to the table, guys. I mean, we're not institutions. I don't think any of you guys are planning to open a financial institution soon. Who knows, right? Maybe yes. But I'm just trying to share that as a way to think of it on a long-term perspective and think of it more as you're building the institution of your own generational wealth, right? Maybe it's not officially a government institution that the government gives you the license to operate your money on other people's behalf, but when it comes to your own family, right? Your own wealth, your generational wealth, you are essentially an entity managing the institution of your family's wealth, right? So, from that perspective, you want to think about it from 50 years, 100 years, 200 years down the line, because hey, and it has to start somewhere. Why not start with you? And then that's why I love the way you think about it. Let's get into it.
It's cut in half 3 times. The second problem is it'll be stolen by a criminal or a politician that disagrees with you. And the third problem with it is that gold is a property you have to put in a vault. And if you have to put in a vault, then the counterparty, the bank, is able to hypothecate it and rehypothecate it, which means they basically sell 100 ounces of gold paper for every ounce of gold you hold. And they keep shorting it naked, and they hold the price down and manipulate the price. You can't hold your own gold. So ultimately, the problem with gold.
Another problem that he probably didn't mention, but I'll add it to the problem as well, is yes, you mentioned about printing gold. I mean, not necessarily printing gold, but because of the supply, right? The mines, there is more gold added to the market, so that also limits the ability for it to. It kind of like devalue it a little bit, but not to the same rate of digital currency because it's attached to something physical, but it's still finding more gold to put on the market. Now, if you're looking at just Earth, right? I think we probably exhaust most of the mines already, and then we're just trying to get a small percentage. But if you're talking about like what's out there in space, right? Then there is tons of meteorites or other planets out there that could get a lot of gold, right? If we start mining those, it's over. I think there was this article once that I saw. Maybe I can help you find it, but it's about a nice, was it like an asteroid that had quadrillion in gold. Like they estimate this rock um was like so, there was so much gold in this rock that yeah, I found it. But don't worry, guys, I found it for you. You guys will understand what I'm trying to say. Was it yeah, there you go. This dailymail.co.uk. All right, let's see what this article has to say. Look, check this out. All right, you call it the psyche asteroids that was once thought to be full of iron, nickel, and gold, and were 10,000 quadrillion, may actually be less heavy metal and more hard work. New analysis suggests. Well, new analysis suggests, but let's say that it's only a quarter of this number. It still might be more gold than we actually have on Earth, right? So now it's not a big deal. It's not a big deal. But imagine someone like Elon Musk create a rocket, and then you know how innovative he is. He creates a rocket, and all of a sudden he decides to go fetch some gold in some areas of the world where, you know, some areas of the world where so there's lying rocks out here finding gold, and then he brings all this gold to the market, right? Then it's obviously going to devalue everyone's gold in their vault, right? It's the same problem with money. It's just harder to get. It's harder to print, for lack of a better word, but it's still the problem that gold is having. That if you're thinking about it from long-term perspective, that it could be a problem. So let's hear what else he has to say about that.
Gold is holding money in gold over the course of 100 years is going to lose 85 to 90% of your wealth under the best of case. The other problem is you can't move money through space with gold. I need to move money through time and space. I need to hold it for 100 years, and I need to move it from here to Tokyo. If I want to move, $1 billion of gold is like 30,000 pounds or something. You want to move a bunch of money through space, it's going to cost you 3 to 6 months and $5 million to move it once.
30,000 pounds. It's heavy, right? So again, when you're talking about shipping cost, some places you probably have to use a boat, slow. If you use a plane, well, the heavier it is, the more expensive it will cost you. So moving money through time, and we're talking about not just a wire transfer here. We're talking about the real money, right? The real gold money, physical gold. If you're just like cryptocurrencies, if you don't hold your keys, you don't hold your cryptos. Well, it's the same thing in gold. If you don't hold the physical gold, you don't own the money. Peter Investor M, El Dorado on Earth. Absolutely. Yes, man. This is crazy. But I don't think this is on Earth. It's on space. This article right here. We're talking about it. Article ones that people thought it was like $10,000, 10,000 quadrillion dollars, right? All I'm saying is imagine 1/10 of that number, 100 of that number. If we're able to land that, like Elon Musk gets a rockets traveling to get it. Well, what would that do to the gold market on Earth, right? What would that do if everyone can get their hand on gold now? It's not as valuable anymore because it's available in abundance. And then over time, we're developing rockets. We're developing easier way to go access space. So who knows? Who knows if we're talking about 100 years down the line? This is something to factor in. But now it's talking about like moving goals to space, moving money to space, and he's looking at different options. And we're going to bring that into the conversation as well as they move forward, because there's a very key point I wanted to talk about that. But let's get into it.
If you want to move it through time, you're going to lose 80, 90% of your money through time, and it's going to be seized. So gold's a pretty expensive way to move money. Currency is an ineffective way to move money. Property is only good so long as the nation state that the property is in chooses to allow you to continue to possess it. But of course, the oldest story in the world is, we lost the family farm because we couldn't pay the property taxes. You can hold the land. Buy 10,000 acres of land, someone moves in and sets up shop next to you, they incorporate a city, then they bring 50 people in the city, then they make themselves mayor, then they pass a property tax, then they annex your farm, then they give away free money to anybody that wants free housing in the city, then they double your property tax, you can't pay your property tax, then they seize the property because you can't pay the property tax. So ultimately, property is not...
For those wondering why is it so fast, I'm playing it at 1.5 speed just to go through it very quick. I won't play the whole video, don't worry about that. But I wanted to go through some key points that he's going to mention. But basically, we're talking about why Bitcoin is king, and he's evaluating on comparing to other assets like gold. And Mr. Cashflow Hunter saying, like, so Pax Gold, is it the only options right now? To me, it seems that it is. It's just it's the easiest way right now to manage gold for me. I like the ability to control it with digital currencies and gold. Now, the only thing I haven't tested yet is, can you redeem the gold? How easy it is to redeem the physical gold? Is there a way that it can be tied to some kind of MasterCard, right? Now, with my crypto.com exchange, I believe there is a way that I can buy gold or packs, store it in my crypto.com wallet, and then use that and maybe sell it if I need to convert it into my digital card, right? So at least that is some sort of version that I had with the previous company that I have. And that's kind of why I like it. It's like the easiest form for me to manage gold, hold it, but I still need to understand the redeem aspect of it, right? How easy it is to redeem gold if I wanted to convert my packs into physical gold. Because, for the most part, I know it is being backed by companies that are well insured, like a Gemini, for example. Gemini, if you see a crypto in Gemini, there is some level of insurance in there. So that's good news. And whenever, yeah, Pax Gold, I can buy Pax Gold in my app right here with crypto.com app. Let me see it right here. Look at that. Crypto.com. Oh, you can't see. You can see. I will have to adjust the settings here. But yeah, it's and then the beautiful thing about buying it as a cryptocurrency is you don't need to buy a full ounce of gold, right? You can buy it like, hey, maybe I want to buy like um only $1 worth of gold, right? You can buy $1 worth of gold. You can buy $50 worth of gold, and then yeah. But with my company that I used to, they convert that into grams instead of an ounce. They give you the equivalent of gram, and you could have the minimum requirement was $55 for a gram, with the price of gold as a 1,800 an ounce. But this one you can even go lower than that because it's cryptocurrencies, right? So you could go like point 0.5. Let's see, that's the minimum buy you need. I don't even know what the minimum buy, but I can go by 0.001. There is a they do have a minimum, sorry. And the minimum is $1. Wait, 000. Yeah. So the minimum do you buy on this app is $1. That's the minimum you need to buy gold, which is a lot better than what I had before, which was the $55. That was the minimum you needed to buy. So that's the beauty of combining digital currencies with gold, right? 1 ounce of gold, if you were actually trying to break that and put it into your vault and all that, it would be a pain. But now you can only literally buy uh like a very small percentage of a gram, microgram or something, that is worth $1 and store that and use that as a way to as a way of money. But and very interesting concept. I think for the most part, this is where I'll store. If I want to buy gold, that's how I'll do it. But I need to understand the redeem aspect of it. So if you want to try that, let me know, and we can join me on Discord. We can continue that conversation. But yeah, for me, it's looking like it might be because I haven't found a great replacement yet um, for gold money, Mastercard. So with that, the problem is the system might have the power to block your Pax gold transaction. Absolutely, yes, that's the thing. That's the thing. That's why you need to also understand how easy it is to redeem your your gold. And this is a centralized exchange, right? So it's tied to the system. Tied to the system. So pros and cons. What you lose, what you gain in mobility, you lose in freedom. Or at least for the most part, if you play ball, you'll be good. But you know how this thing goes. They can change the community guideline. And next thing you know, it's a different story. It's a different world out there. So let's see what else he has to say, and let's get into it.
Not a very effective way to hold money for a long period of time, and you can't move money through space. So this is a problem. I started going down this rabbit hole of thinking about what is money when I realized that I was in essence going to lose my company, right, and destroy the livelihoods of all my employees, and waste 30 years of my life. And so when I started thinking about it, and it's helpful when Jerome Powell says when I've been thinking about raising interest rates, your strategy of investing in bonds is broken. When I started thinking about it, what I realized is money is energy. Money
Mm.
is economic energy, social political energy. Currency is a medium through which the energy moves. Um, if you wish to
Guys, this is very important. This is the whole reason why I chose this video to show you, and we're gonna break this down. So I wanna talk to you about that again. The first time I heard the concept about money being the energy was by Mike Maloney, who talks about, yeah, I talks about that a lot. Money being an energy. It even talk about that from the store value and gold perspective. But I need you guys to pay attention to this because he's going to bring another aspect to that energy discussion. Remember, he's a grad from MIT that Mike Maloney did not bring. And that's what I learned. I mean, I always knew it, but hearing him saying it, it's beautiful. And it's probably the most simplest version of this explanation that I've heard someone say. I wanted to bring you guys to this. Let's get into it.
is money is energy. Money is economic energy, social political energy. Currency is a medium through which the energy moves. Um, if you wish to hold energy and transport energy, you need a technology. We're not using gold anymore. When we use gold, as I pointed out, it's expensive and it's cumbersome. Currencies don't work. The U.S. dollar is the strongest currency in the world, but it's losing 15 to 20% of its value a year.
Mhm.
The peso is losing 40 to 50% of its value a year. The bolivar is losing 100%, 95, 98% of its value a year. So once you start thinking about it that way, you start thinking, well, what's a better way to store economic energy through time? And you realize that the currencies don't work, gold doesn't work. So what is money? Well, money in the last 30 years became the S&P index. You buy a diversified portfolio of companies, of stocks, which is a little bit better because maybe you're getting bled 2% a year by the management team, but the company's making money, and so maybe you can hold value. It turns out that the money's losing about 10% of its value a year, and the S&P index is going up about 10% a year. And you look at that for 100 years, and there's a very interesting correlation there. A diversified portfolio of
That's a good point. Man, this is an interview that you guys have to watch on your own and watch it over and over again because every so often it drops like small gems that goes mostly unnoticed, but that has deep and profound meaning, right? He's talking about like, hey, basically the S&P 500, right? If you were buying that, that would rise maybe 6%, 7%, anywhere from that, let's say 10%, right? But then it's rising 10%, but then the true way that money is losing its value, saying 10% year over year too, it could be 20 sometimes. So at the end of the day, your wealth is not gaining or losing its value, is because it's just stable. It's just keeping money at its pure core. You're not gaining more value, you're not losing more value. But should the money lose, like should the rate of losing purchase power is higher, then yeah, you're risking losing money over time. So very interesting point. But you also mentioned about money being economic energy, right? We're going to break that down toward this thing, but I won't get into it yet. But I want you to pay attention, and whenever you mention the money and energy aspect of it, because this is a very important topic.
assets is tracking the money supply. Okay, interesting. What's the problem with that? Well, the problem with holding stocks as a store of value is if the stock goes up by a factor of 10, there's a management team that has a fiduciary obligation to issue more stock. There's a temptation to issue stock. Stocks aren't scarce. The amount of equity shares will also go up. If the stock is overvalued versus the fundamentals of the company, the CEO is almost certainly going to issue more stock. And so that's one problem. The second problem is stocks have political nexus.
Hey, we're seeing that right now, right? We're seeing that right now. Google, Amazon, they're basically breaking their. There's this latest company that was it last week that said that they're going to split stocks, right? Like 20 to 1 stock splits to allow investors to buy in more stocks available. So if you had stocks before, that's fine. It's still getting its own value, but at the same time, issuing more stocks, it's the same thing as issuing more currencies, right? It's the same thing as issuing more currencies in the market in a way. So it's what he's saying is when the stock is overvalued, it's kind of like the CEOs, their goal is to necessarily devalue the stock in a way and make it more affordable to more people in a way, right? So interesting concept.
They have management teams. They're in countries. They can be unionized. I can put a tariff on the product. I've got a competitor. What if the CEO goes bonkers? All sorts of interesting problems. What if the company gets expropriated by the government, or the jurisdiction it operates within? So stocks are an imperfect approach, better than gold. The other approach is buy a bunch of buildings in New York City, buy scarce desirable real estate in Miami, Los Angeles, London.
So it's talking about stocks being better than gold in the perspective of holding and preserving your money on a long period of times. Why? Because, hey, stocks is appreciating 10%, but also inflation is rising over 10%. So it's kind of like I have this niggard effect. And even though if the CEOs issues more stocks in the market because the company is being overvalued, well, if you had it already, it's still maintain you still maintain the same market cap you had, right? You still have the same position. It's just like now there's just more shares to go around as opposed to a limited amount of shares, which gives you more power and more room to sell it to other people. So that's the key factor. But it's better than the 2% that of gold that is being added year over year that still has the same effects of adding more currencies to the market year over year. That's what he means by that.
An interesting idea, and the best idea in the 20th century, if you're going to try to either create wealth or hold your wealth. If you want to hold your wealth, you buy $1 billion worth of property. If you want to create wealth, you borrow $1 billion and you buy $1 billion of property. And you start with $1 million of equity, a sliver of equity. And what you're doing is you're going short the currency and you're going long the property. So if I told you, let's go to Argentina. If I told you in Argentina, the peso is going to go from 1 peso to the dollar, to 5 pesos to the dollar, to 10 pesos to the dollar, to 20 pesos to the dollar, to 40, to 80, to 100. The black market rate right now is 210 pesos to the dollar, 220. If I told you it was
black market rate 200 pesos to $1, and this is something I know very well. I was just talking to a friend this morning, and she was telling me that the $1 is equal to 116 Asian currencies, right? They call it gold. So 116 gold for $1, right? So back in my days, it used to be like 25 gold for $1. So that's what happens in other countries when currencies are being devalued. And I know that very well. I've lived through some of that already. He lives through it too in Venezuela or Argentina or other countries. But that's what he's saying, guys. And different market has different rates. 200 in the black market.
It was going to collapse from 1 to 220, and you had 20 years of notice. What's your best strategy? Take your $1 million pesos, convert to dollars, and you're going to have 220 million pesos in 20 years. You're going to look rich. Better strategy is borrow $1 million pesos, convert to dollars.
Wow.
Best strategy would be mortgage your entire company in pesos, sell equity in your company in pesos, convert it all to dollars, and then get the dollars out of the country. Because if they're in the country, if the $1 million pesos is converted to dollars in a bank in Argentina, then the government will basically pass a law, force your dollars to be converted back into pesos, devalue them. And I happen to have some experience with that because I actually had $1 million in Argentina during the last currency collapse. They converted it to pesos. They devalued it 10 to 1. A day later, I'd lost 90% of my money. So,
now, remember the title, right? Why is Binance so wants to control cryptocurrencies by all costs? When I chose Biden, but it's basically any leaders of any governments, and that remember as they tackle, they want to make sure they understand the risk. They understand the risk and understand the opportunities that can go with cryptocurrencies, right? The risk is what other cryptocurrencies that they cannot control because it's not necessarily in a bank. It's not necessarily something that they can control. And when government do have control over it, this is an example of what they do. Desperate governments do desperate things. They go after their population's wealth. This is what history has shown over and over and over again. And history doesn't necessarily repeat itself, but it often rhymes, right? So you are going through an experience and you don't have to live it yourself. You can just listen to someone who is still alive telling you what happens to him in different countries. As he was an investor, as he was investing in real estate, he's telling you what he had gone through. So he see the worst case of what could happen in with currencies, and he's addressing that right now before it happens to it in the United States.
Simple idea: short the currency which is collapsing, go long property, and then get the property out of the country, because the property in the country is also going to devalue. because the property is valued based upon the stream of cash flows, right? If the building has got a rentor and it's got a lease, and the lease is capped at CPI or denominated in local currency, when the currency collapses, the value of the rental income also collapses. So wouldn't it be great if I could buy a virtual building in Argentina using borrowed pesos? And then what if I could spirit the building out of the country and rent it to people in London or New York City?
Mm.
That's what Bitcoin is. Bitcoin is digital property that you can teleport anywhere in space instantly. And it's also perfected property with the lowest maintenance cost. You know, you don't have the property tax you have on a building. You don't have to repaint the thing every 10 years. You don't have to worry about leaks in the roof. So if I could buy $1 billion worth of property and it was in cyberspace, and if you couldn't make any more of it, if I capped it at 21 million city blocks in cyberspace, and if I could hold it for 1,000 years, I might have a better idea than buying a city block in Manhattan or a building in London or even a company. And it's a lot better idea than buying 30,000 pounds worth of gold. Why?
Right.
Because real estate developers are going to create more buildings, gold miners are going to create more gold, mayors are going to pass a property tax, and they're going to put some kind of enjoinder or some kind of restriction on your rent control your building. Something, you know, acts of God are going to create earthquakes and floods and lightning strikes, and none of that stuff's happening in cyberspace. So,
all right. So I wanted to separate right there. That's one of the great conversation he started in this podcast. Has Bitcoin is digital property, right? Digital property, Bitcoin. That's what Bitcoin is, according to him. And I like the way he processes it because it's true, right? If there is only 21 million of it, it's kind of like saying there is only 21 million, I don't know, square meters of livable areas on the earth that you can build real estate on, and every time someone buys it, there is less and less in the market available, right? So it's the same thing with cryptocurrency. Now, first thing he mentioned 1,000 years. This guy is very optimistic. Going back to the first thing I mentioned is, I mean, maybe the audio was off, you may not hear it, but from the beginning, they were saying that he only got to cryptocurrencies in 2020, right? 2 years in, probably spent 100 hours and more in cryptocurrencies, fine, but it's still 2 years in and he's still too optimistic. Still too optimistic. That is one critics I have for him. He's seeing it in a way that is not allowing the skepticism to give a fair way to analyze cryptocurrencies. 1,000 years Bitcoin right now, no. After 100 years, there will not be any more Bitcoin being printed, and the system relies on people keeping the nodes alive. And what keeps incentivize people to keep the nodes alive is the rewards that they're getting in Bitcoin as they keep these ones alive, these nodes alive. They receive Bitcoins as payment, right? And then these payments, they can exchange it for cash or for something else of value. But after 100 years, right, we're going to mine the last 21 million Bitcoins, and that's it. There is no more incentive for anyone to keep the node alive. And if the node is not alive, what is the value of Bitcoin, right? Can the value of Bitcoin operate without the nodes? So, interesting point. And that's what I'm saying. He's talking about institution money. He's talking about, I agree with him if he's talking about on a scale of 50 years. Maybe 50 years, Bitcoin might be a great hold. Maybe close to 80 years, right? We already are 10 years in. But not 1,000 years. Not that. Not 1,000 years. And that's where we're getting some. We got to be fair here, and we got to, although we're learning a lot from him, but I didn't like when he mentioned 1,000 years because that's not realistic. Very quickly, let me go through the comment section. Thank you for being active in the chat. When a country nationalized the private companies into public ones, when a country nationalized, is that a question, sorry, or a statement? Sorry, I'm not following quickly. Sorry about that. Nationalize the private companies into public ones. Oh, yeah. Yeah, sometimes, yeah, when they want to go after, yeah, desperate government do desperate things. He's talking ownership of digital property versus physical property, which is safer and lucrative. Well, based on his argument, he's saying that the digital properties is safer. Lucrative is not even looking at it from a lucrative perspective. He's looking at it from a holding its purchase power, holding its value over a long period of time, and not necessarily losing money. As an institution, that's what he thinks about. And where he takes the value is if I can keep the value long enough and maintain its value while everything else loses its value, then indirectly the purchase power becomes valuable and more value. You see what I'm saying? Because he was able to maintain it stable while everything else got lower. So now someone who has more power to control what's happening in the market, or he has more purchase power because he was able to maintain wealth for a long period of time. That's the mindset that he has, and he's approaching it as not necessarily lucrative of not just maintaining it but multiplying it. You see what I'm saying? That's the difference.
So the whole idea of Bitcoin is it's perfected, engineered gold, crypto gold, with none of the defects of gold. You can't mine any more of it. It's weightless. I can move it at the speed of light. It never decomposes. I can break it into 1,000 pieces in a second, send it to 1,000 places, and recompose it.
True.
All using a computer program. And I can take personal custody of it. Maybe the most powerful two ideas are: I can hold possession of $1 billion of Bitcoin in my head, just holding a password or set of private keys. That's a pretty big idea. Maybe the first time in the history of the human race that you can actually take possession of your wealth and take it to the grave with you, or take it anywhere else on earth with you. And even if I put a gun to your head, the most I can do is kill you. I can't take it. And this is a very interesting idea. Every other form of property in the history of the human race, I pull the gun, I get it all. Right? My incentive is to violence. With Bitcoin, I pull the trigger, I get none of it. So the incentive is.
I disagree, man. I disagree. Again, well, first of all, I agree that Bitcoin is a property. I agree that, yes, it's first time in history that your incentive is not necessarily killing someone to get their property back. I agree. But here's where I disagree. I bring this guy, I would bring him, right? Let's say he has $4 billion, which technically he invested $4 billion in Bitcoin. He has $4 billion worth of Bitcoins, and he has it on a ledger, and his store is memorized 22 or 12, 16 different codes for his private key, right? So that's what he did. Let's say that he does that. Fine, great, granted. Granted. And he's like, well, if you shoot me, I'm going to shoot you if you don't tell me your code. Well, he's going to be like, well, hey, you shoot me, you won't have the code, and I'll bring all that $4 billion account will go to the grave, right? Perfect. Well, me, I would bring him to Haiti, and then I'll have these guys deal with him, and they won't kill him. No, they won't kill him. You know what they're going to do? Torture him. And it's not, these gang people. They're not going to torture with waterboarding. All right. And sometimes, sometimes you might pray for these people to kill you instead of continuing torturing you. And maybe, what if they tell you then they're torturing after a month, 2 months, 3 months, 6 months, keeping you alive just for the purpose of torturing you? Then they're like, the only way this stops is for you to give a valid code of that $4 billion ledger that you have, right? You got to give the code. And if you forget it, because you're focusing too much on staying alive, surviving those tortures, well, those tortures will just keep going. So, are you then not going to give me the code? You see what I'm saying? That's why I disagree. Too optimistic. When you're too optimistic, you don't evaluate all the potentials of failure for your analysis. And I'm not saying for the most part I disagree with what he's saying. I'm just saying that small point alone is very good at converging people and convincing people that Bitcoin is the real deal. And for the most part, he is right. 90% or 99%, I agree with him. But small. Shout out to Peter Investor M. Just inject a truth serum, it will talk. Thank you. Like, I'm talking about 6 month torturing. This guy has a more efficient way of doing so. Thank you. Truth serum. Now, what is that password for your ledger that holds $4 billion worth of Bitcoin? You're not gonna telling me that, oh, first time in history human don't have incentive to go violence. Right, they have incentive to use truth serum instead, manufacturing truth serum in masses. Come on now, man. Again, extremes in everything is a bad thing. He's going too extremes in Bitcoin, and that's going to be the downfall of him. Not necessarily a downfall. Too hard, too harsh. But something that he will not see coming because he's too focused on the optimism could affect his investments. Right. And I know there is one thing I can think about that when he was challenged, he didn't mention it. But we'll get into that and we'll get to that quick. Let's get into it.
The negotiation. I'd rather have half than zero, right? And it's a very interesting idea, big idea. And the second big idea
You
is
got super intimidated, by the way.
the second big idea is it's a virus. It's a cyber virus. It's a chain reaction in cyberspace, or it's a life form in cyberspace. Bitcoin is a bank in cyberspace run by incorruptible software, and the software itself is going to basically protect your money. The problem with software is I don't trust the computer it's on. If it's on a single phone, I can seize the phone and reprogram the software. So if I came up with a bank that was run by software, how do I prevent any human being from corrupting it? The thing that makes it incorruptible is I release thousands, tens of thousands, or hundreds of thousands of identical copies in cyberspace, and it's self-replicating, and all of the copies keep track of each other, and when one of them is corrupted, it gets kicked off the network. So you could think of it as I release the life form, plankton, or a virus, and I let it go, or a swarm. Now, you're a part of the swarm. I shoot you. It doesn't help. You have the genetic code. I shoot you. It doesn't help. I obliterate all of the algae in the Atlantic. Won't stop it. I eliminate all of the bacteria in your body. Won't stop it, right? It's a virus. It's going to keep spreading. And the beauty of the system is it's in essence this chain reaction in cyberspace. And the only purpose of the chain reaction is to protect the integrity of the network. There will never be more than 21 million Bitcoin. So what you've got is truth and integrity released as a cyber virus. And you can, if you choose to join that network, you avail yourself of all of the benefits of that network.
How many of the 21 million Bitcoin have been mined already?
About 18.5 million.
Okay.
Exactly.
Yeah, it's
18.5 million already mined. And the remaining, close to 3 million, 2.5 million will take almost 80, 90 years to get mined, right? So not 1,000 years. But yeah, basically, I hope that gives you a good picture of what is Bitcoin and why it makes people like Biden so shaking in their boots, right? In the potential of what it could achieve, because that would give too much power to the people and less power in governments. And that's why governments all around the world do whatever they can to limit that in any way they can and go from there. So I had another segment I wanted to talk about today. You mentioned the concepts of Bitcoin is digital money, right? Digital money, but not just digital money, but energy. Money is energy, right? And Bitcoin is kind of like energy. So I know we can say Bitcoin consume a lot of energy to operate. Fine, that's true. But we're talking about economic energy here, and this is a concept about money that most people are not even aware of. You don't necessarily hear that. You don't necessarily think about the energy aspect, the economic energy aspect of money. And that's another great way that I wanted to start this conversation and let him explain it in his own words, because I truly agree with what he's saying. And he mentioned that a couple of times, but I think we're going to dive deeper into what he has to say. Let's get into it. But before we do so, shout out to Peter Investor M. Those who own the most Bitcoins will not let you know they have so much, will not let you know they have so much fear of being an easy target. Yeah, I guess not him, right? He's telling you that his company owns $4 billion worth of Bitcoin. And yeah, the good thing is you can technically go validate which address he has on a network, on a ledger, right? You could do that, but it's a lot of Bitcoin, right? Over 100,000 different Bitcoins. Each of them are worth like $40,000. When he started buying Bitcoins, Bitcoin was like $3,000, $10,000. So he's already 4x in his investment already, right? So let's see what he has to say about energy.
Using your name for this type of
One out of a
behavior.
thousand. 1 out of 1,000, but yeah, they obviously work because they do them every 15 minutes. If you went online right now and type Michael Saylor crypto giveaway or something, you'll probably digital energy, right? This is a big idea. We've encrypted money, right? It's such a huge idea. Since most people don't know what money is, it doesn't occur to them that money is energy. Since they don't understand what money is, they don't really understand that money's defective, that the energy is bleeding out of their currency. And by the way, if money is energy, the energy finds its way into a currency. It also finds its way into stocks and into bonds and into property. They're all bleeding energy over time or over space. And if you're an engineer and you understand that a well-engineered system is a system that allows you to move energy through time and space with no power loss, no impedance, superconducting, which is that we call that like it's an adiabatic system or a thermodynamic.
Now, when he mentioned that as an engineer, man, I was like, wow, that is so interesting. Moving money from time and space with no loss or with less loss possible. Is right. Is right. Now, I wouldn't necessarily assume that Bitcoin is the best way of doing that. Like something like an XRP is much better at that, but it's still good. It's still true, right? Moving money from times and space, that something that holds its value over time. Now that's where XRP is a little bit iffy, but Bitcoin, right, the way that is structured, it's still on money, a type of money that is holding its value over time, that you can move in time and space, and it stores its economic energy. It stores of its economic energy because that energy can have other effects, can be being transformed into different ways. That's the other thing we learn about energy. You can't really create energy. You don't really destroy it. You can only transform it. Right now, economic energy can be transformed into uh, chemical energy, mechanical energy, right? Fuel energy. With economic energy, you can have the calories energy, and with calorie energy, you go create mechanical energy or any other type of energy that leads you to space, for example, right? With the calories, you stay alive. It's a energy, right? It's a flow of energy being transformed into different ways, and I never even considered that before. But I consider the energy part from when Mike Maloney mentioned it. But listening to him gave me a whole different perspective of the flow of energy and how money is interacting with that. And shout out to him for that. Shout out to him for educating us on that. And I like the approach of comparing that with the energy with the engineering mindset, right? With the least loss possible. It derives the equation from velocity to energy. Yes, there's also velocity of money. How many times $1 is circulating from one person to the next. Economic energy. So yeah, absolutely. Shout out to him. Thanks you for that comment.
Sound understand that a well-engineered system is a system that allows you to move energy through time and space with no power loss, no impedance, superconducting, which is that we call that like it's an adiabatic system or a thermodynamically sound system. If you're an engineer, you totally get it when you're designing a pneumatic system, electrical system, even a heating system in a house or a swimming pool. If the water drained out of your swimming pool, it wouldn't work so well, right? If your bathtub, drained out, it doesn't work so well. So engineers understand this, but economists don't really think of money as energy, and so it doesn't occur to them that the energy is bleeding out of the systems. Once you figure that out, you realize that Bitcoin is truly brilliant, because what they've done is they've created a thermodynamically sound monetary network that allows you to store any amount of energy for any period of time and move it at essentially no cost anywhere in space as frequently as you want.
Pat, have you ever?
And it's lossless.
He's saying
Lossless. Yeah, that's a key word.
You've heard that money is a tool. Money enables. I've never really heard money being used as energy. Is this something that you've heard before? Where the energy thing?
Oh, sorry.
Listen, I mean, it makes sense though. It totally makes
Basically, he
sense.
means no. He never heard that before, which is surprising to me because this guy is a multimillionaire. And I find it interesting that a multimillionaire was able to stash all this money and didn't know that. Now, I'm not saying that I feel superior than him, that I knew it. I had to do a lot of research. And thanks to Mike Maloney, if it wasn't for Mike Maloney, I don't think I would even be exposed to this information. But it's interesting, right? It's interesting that you don't necessarily need a deep PhD level of understanding of how economic money works and still be able to generate a lot of money. Well, because there's different ways to generate that. It's very good in sales, and that alone is a skills that if you can master it, right? And you're also very good at the recruiting the best talent for him for his visions. So with that alone, you can still get a lot of money. But when we're talking about storing the purchase of value over like the purchase value over a long period of time, that's when understanding the energy aspect comes in. And I'm happy that we can see basically someone who's a multimillionaire. We did not know this, so don't feel bad if you didn't know it either. But that's why I'm bringing this conversation to the table here, and then we can start thinking about it on a different perspective. Right? This is the perspective that most people are not exposed to, and we gotta bring. If you're talking about financial education, it's a great way to think about that. Money is not, and again, key point. We're not talking about currency here. We're talking about money. What is the difference? Currency loses its value over time. Money maintain its value over time. It's a store of value, right? Gold has been so far the best form of money. It has withstood the test of time, right? Now, Bitcoin is arguably could be better and it will provides more features, but it hasn't withstood that much time as compares in comparison to gold, right? And we might be in a situation where Bitcoin might die and gold might still be alive. But throughout the time that Bitcoin is alive, it could provide a level of security and benefits that will outshine gold. And maybe it will be easier to make a transition to a new platform later on. Who knows? But interesting point. Let's see what he has to say.
The way he's describing it. For me, when I'm listening to him speak, all I'm thinking about, and I hope the audience is doing this as well, is how this man processes issues. I mean, as an investor, everything he went through was common sense. Nothing that he went through on how he came to the processing of why he wants to do this is, now you can sit there and disagree, and you can say, I disagree with him. I'm going to go this way. I'm going to go that way, which is totally fine. But I'm just listening to the way he's processing issues. Tyler, can you pull up that story, what happened in Canada? Because for me, one of the
Now, okay, that's basically where I wanted to stop it from now. I still have more to go, but I don't know if you heard it so far, but he's very confident in how he approached cryptocurrencies. So confident that he put like most of his money in Bitcoin alone, just Bitcoin alone, right? He has his he has a very interesting views about Ethereum. I don't think he invests any money in Ethereum. Fine. Me personally, Bitcoin is not necessarily something I don't invest in. Not because I don't believe in it. It's because I'm looking at the rate of growth, and I can make much more money, like 10x, 100x in other cryptocurrencies as opposed to Bitcoin. But if I would store my cryptocurrencies in a long-term portfolio, my first choice would be Bitcoin, right? So interesting. But I'm going to put it somewhere where we're going to start talking about his level of confidence, because he's very confident, and it's not necessarily a good thing either, right? Because when you're too optimistic, you can bring you kind of blind to things that could lead to your failure, right? You're blind to it because you're too focusing on one thing, and then nothing is really no one is challenging you directly. And I'm going to love the interaction we're going to see here, because there's so much it can teach us about cryptocurrencies and about being overly confident, right? Shout out to Peter, investor in Terra Luna. Terra Luna, I mean, it's one of my favorite cryptos this year. But even that, there is cryptocurrency that I'm investing right now that has a higher rate of growth than Terra Luna. But that's a topic for another day. But thank you for mentioning that. But let's get into it, guys. Let's get into the content and power to it.
When you had your money there, you were trusting the guy that ran the bank, the manager of the bank, the mayor, the head of the police force of the bank, the head of security of the bank, the dude that came to actually fix the lock, everyone that touched the thing, the governor of the state. Then you were trusting the head of the country, the central bank.
It's talking about holding your gold in a vault in a bank, right? This is everyone you have to trust. which is true, because if any one of them is corrupted, then they can go and sold or steal that money, that slash gold in your bank?
Bank that manage the country, the military system.
Who do you trust with Bitcoin?
Nobody. That's the point. Nobody. Bitcoin's a bank in cyberspace run by software, incorruptible software. And this is the beauty, right? Really great engineering. It takes a corruptible element and puts corruptible or imperfect elements together in a system such that they cancel out their imperfections to create perfection. Where did this happen? Happens in a thermostat. In a thermostat, I have a strata or a metal, and the metal contracts when it gets cold and expands when it gets hot. Okay, now I tell you, build something which doesn't contract and expand when it gets cold and it gets hot. You're an engineer. How do you do it? You take the piece of metal that's going to contract and you put it in opposition to another piece of metal that contracts the other way. But if they're both the same and they both contract with the same force, and you pin them, they cancel each other out, and then you actually get a zero tolerance perfect machine.
This is the MIT guy talking about it, right? This is the MIT in him. But let's get into it.
That's how John Harrison created a perfected clock. He basically used that insight that imperfect elements can create a perfect mechanism in a clock. That clock was used to calculate longitude on the ocean. That's how we actually navigated for 300 years. It's all based upon a bunch of imperfect elements that create a perfect mechanism. Bitcoin is the same thing. I've got a piece of software, it runs on a machine. Is it perfect? No. Why? Because you can corrupt it. How do I fix it? I give another piece of software to him. Now the two of each of your machines check each other. Well, what if you're both corrupted? Well, I throw another 10,000 of those pieces of software into the ether. Well, who do I give them to? People I don't know. How do I corrupt them? How do I even find them? Okay. What if I promise to murder everybody in the US that doesn't change their Bitcoin nodes? Doesn't help. Doesn't help. What if I murder everybody I can find with a Bitcoin node? Doesn't help. I can't, right? How do you stop a fire? How do you stop a fire in cyberspace? Right? It's like you've released this thing.
You've operated, you've invested, you've seen things. You saw Amazon drop, I don't know, what was it, 95% in '05, whatever the year was when the stock went down 95%. I may be wrong on that.
As you can see, guys, very confident, and his arguments are making sense for the most part. Making sense, right? Actually, so far, he hasn't said anything in terms of argument-wise, right? I'm being picky about small details here and there, but argument-wise, the gist of his argument, he doesn't make anything that you would disagree with when you compare Bitcoins and other types. But again, that leaves a level of confidence that he exudes that not necessarily a good thing. And he's going to get challenges on that. And let's get into it.
You've seen a lot, okay? You've seen a lot of what's happened. Yeah, so you seem 100% certain about what you're talking about, which history doesn't favor 100% certainty. You know, it typically, you know, and it's not even I'm not even talking about the trust but verify. There's got to be an element of skepticism, but you're like, no, it's almost a combination of a person who has experience running a business, investor, genius, but also a salesperson. You're very, very good at persuading as well. Are you 100% certain about the future of Bitcoin and that it has zero risk? There's no risk that could do anything to
I don't
it?
think you can state that. No, I think that everything in life has.
Now, very quickly, I wanted to say, man, valuetainment, the whole platform of valuetainment, shout out to you guys. That was a beautiful question to ask him. And no one I've seen ask him a question so direct about challenging his optimism about Bitcoin. Because again, this guy's all in. Like, he means what he say. He put his money where his mouth is. And he's talking about putting over $4 billion in Bitcoin. That's actually one of the critics he has for the gold community, because they're saying that no one in the gold community truly put most of the wealth in gold, right? And he's talking about if he can find anyone that puts $1 billion in gold alone, the physical gold, right? Then he would start having a discussion with them seriously about the benefits, the pros and cons of Bitcoin. He actually had a good debate with a gold bug, but I might make a separate video reaction on that. Not a podcast, but throughout the end here he has a video. He was talking about Peter Schiff. Peter Schiff is a gold bug who hates Bitcoin. He was telling that Bitcoin is gonna crash to zero. He has to sell doomsdays to sell his gold. I actually like Peter Schiff a lot. Much respect for him. I disagree with his take about Bitcoin, but I agree with a lot with his take on gold and macroeconomy. Shout out to him. But he means what he say, guys. He puts a lot of money into it. He's very confident. But that could also be an Achilles heel, right? And I'm happy that Mr. Patrick Bet-David here challenges him on that. Now, here, listen to what he has to say, because he's going to evade it in a way, gives his reason, and then we're going to get there again. We're going to get there again until he responds to our questions. Let's get into it.
as risk. So there's a black swan risk, an unknown unknown, and anybody intellectually honest has to admit that there is that risk. That's not what I would say. What I would say is you've got a bucket of money. Let's come back to Africa. Okay. You've got $100,000 in Africa. You've got to invest it in something. You've got to put it into a building, into land, into an African currency, into something else. What are you going to do? There is 100% certainty that you're going to lose 80% of your money in most currencies over the next decade. There's 100% certainty you're going to lose 95% of your wealth over 30 years in just about every currency.
Now that is true. You see, it's very good. Is that's what Patrick Bet David was saying. He's very good at persuading people because he's doing it with facts, and so far his facts are not like he's not wrong in his facts. I agree with it, but and he just saying that there is zero risk. You can't say that there is zero risk about anything. It's not necessarily a nice way to answer that question because you still have to bring me to the okay. You give me the pros, yes. But can you evaluate the cons of Bitcoins? And nowhere in this interview he did that, right? And that's my critics about him. And as an investor, you have to go critically. You have to evaluate the pros and you have to evaluate the cons. And then we're going to talk about that because I'm going to tell you the cons. One thing that he's not mentioning, that he's not paying attention to, that could be his downfall, right? That could be his Achilles heel. Let's get into it.
And so you have to work through each of these issues and say, what's the cost of doing nothing? What's the cost of not taking a risk? What's the risk-free rate? Well, I mean, the risk-free rate is the monetary inflation rate. So the price that you pay to not do something is the rate at which the money is collapsing. If you were a Russian, they just lost 35% of their wealth by not doing anything in a matter of weeks. So, so in this particular case, you just have to look at the array of options. If you're an investor in South America or Asia or Africa, I would say the risk-free rate is much higher for you, right? Like you're in Lebanon, what are you going to do in Lebanon? How about Afghanistan? How about Iraq, right? What are you going to do? In all those situations, they're thinking maybe I'll trust my money to Tether. You know, Tether's run by Bitfinex. It's just a company. So why is it that people in many countries are more willing to trust a company out of Hong Kong that's running a stable coin on the crypto network than they're willing to trust their local bank? Because in fact, Tether is probably a better bet than betting your money on most currencies in the world, other than the top.
Now, here's the problem. Tether is tied to US dollars. So if US dollars crash, Tether will crash too, right? That's one of the problems. But from his perspective, he's saying that, hey, maybe it's better to deal with that, a private company, than it is to deal with their local banks, because what does local bank do? They're tied with the governments. Governments can have influence on that, and desperate governments do desperate things, right? But hey, who knows? Would desperate private company do desperate things? I don't know. But interesting point. But the flaw on this argument is US dollars. Tether is tied by the US dollars. So yes, you don't trust your local government that is in pesos, but you said it yourself. Every currency is doomed to fail, drives to 0%, and the Tether is tied to to US dollars. So Tether is doomed to fail too, right?
Top 12 currencies, the rest are collapsing.
Why do Tether if you can just do the US dollar or USDC?
Well, you can't. That's the point. Why do Tether if you could just do the US dollar? Okay, how many people in Africa can walk into a Bank of America in New York City, open an account, and then get the US dollar? None of them. That's the whole point, right? And okay, I did it. I'll give you an example. I put $1 million into Bank.
Now here's the beauty of cryptocurrencies right now, because you can create an account on your phone, access an exchange, and then you have access to USDT, which gives you indirect access to USD, right? It democratized finance to the world. That's the beauty of cryptocurrencies, right? That's the benefit of it. Again, more benefits. We're trying to ask him a questions to evaluate the pros so he already did the pros. We want the cons, but he's flipping that into more pros. So we can't say there is zero risk about anything, but let me give you more benefit on why Bitcoin is the best thing ever. Like, come on.
America in Argentina when the dollar was worth 1 peso, because I didn't trust the peso. I did it. What do you think happened? The government basically shut down for one day. They sent an edict to the bank saying all dollars must be converted back into pesos. Then they went off the dollar peg and they devalued the peso 10 to 1. And I lost 90% of my money. Okay. So why do Tether instead of trust Bank of America in Argentina? You tell me. Right? Because what's the odds that Tether is going to go to zero in the next year?
Okay, next year, no. What are the odds that Tether will go to zero whenever the US dollars goes to zero?
If the odds were 90% your money's going to zero in the next year by putting it somewhere else, then you would think maybe that's a risk I want to take. So, people are forced out the risk curve based upon the monetary policy. And in a hyperinflating economy in Zimbabwe, right, you're going to take everything you've got. You're going to buy anything. I don't know if you saw, you'll buy toilet paper, you'll buy boxes of cereal, right? You'll buy anything. There's pictures in Turkey. People, and this is this year, people go into a car lot and they buy all the cars. Okay, so here's the news story. The government impounds 54 cars that were bought by a hoarder. Someone had the temerity to actually convert their currency into automobiles because they thought the automobiles would hold their value better than the currency. And then the government seizes their automobiles. Okay, if you look at every single war, right?
Sucks,
the war always has
man.
a story of the speculators. Right?
Yo, that sucks. Your currencies is devaluing so much that you would rather put it all in cars and hope later that you can sell those cars at the price that you want to, and then the government goes out there and then sees all your cars. My God. Imagine spending all your life building your wealth and then losing it because of government taking unfair measures against you. Man, you gotta don't take where you're living here in the West for granted, man, because there are some benefits out here that we have here that other countries don't necessarily have, right? And this is a developing country here. Shout out to She Stole My Thunder. Hello, happy. Thank you for being here. Peter Investor Ham need on exit strategy. Make sure you listen to that interview because I didn't play it too, but he talked about how we, as a culture of investors, we sell the winners to buy the losers. So our exit strategy is buy low, sell high, but he's making the argument that maybe we should buy low, ride high, keep it high, right? Which is interesting. And I agree for the most part. But I also like multiplying my wealth too. And one of the ways to do that is to buy something that is technically losing right now that has the potential to grow and ride in 100x your wealth, right? Because we don't have the luxury to access $4 billion worth of wealth. So we have to multiply the little we have, and hopefully you'll get to 1 million one day, right? So, but I understand where he's coming from. But make sure you check that out about exit strategies too. His exit strategy is basically buy things that was going to maintain the purchase power over time, and go from there. But let's hear more about what he has to say.
Right? The speculators, the smugglers, and the hoarders. What's your crime? Your crime was not holding your money in the currency, which was losing 90% of its value, but rather deciding to buy 2 million.
The crime was not holding the currency that is losing its value, but instead switching that to buy real assets. Well, technically, a car is a liability, but in this context, the car becomes the assets because the metal is going to keep this value longer than the currency that is devaluing fast. So the government sees the cars. Oh man, this is crazy, man, crazy.
Many automobiles.
No, your crime was hedging.
Yeah,
Right.
something like that.
Picking an alternative asset as a storehouse of what you perceive to be security until the sovereign comes back and does one of two things that they're good at. Sovereigns know that debt long term, there's the Jubilee theory, and also inflate your way out. This is or seize and force conversion, which basically feeds right back into inflate your way out.
Eventually, all these countries will just inflate their way out, and the currencies collapse, and that's why they're all collapsing. Right? The currencies are weaker today than ever. I think it's pretty obvious the dollar will also be printed to pay off the debt, and that will just matter.
Talking about the US dollar here. The US dollar will be printed to pay off the debt, which will create more debt because every dollar that creates in existence is automatically attached to almost like a 30% debt on top of it. If you print $1, you owe 30 cents on that dollar because now the real value is $1.30.
manifest itself in the dollar continuing to lose value against scarce assets, it will gain value. It'll be stronger than the other currencies because they're just collapsing faster. So eventually we'll see a world where there's a dollar and the CNY, right? If you're not a very powerful empire, you can't maintain your currency. And that'll be the medium of exchange, and everything will be pegged to it or correlated to it. And then you're going to see monetary energy flowing out of weak property and weak assets into strong property. Like I would sell all the land I have in Africa and convert to Bitcoin. But I would sell all the land in Africa and I would move it to Europe, and I'd probably sell my land in Europe, move to the US, and I'd sell my land in the US and move it to Bitcoin. You're just swapping from a weaker thing to a stronger thing. And the definition of weak is a function of what's the risk it'll be seized, taxed, or impaired, right?
Great definition. What is the definition of weak, like weak assets? What is the definition of a weak asset? Its probability to get seized, taxed, or impaired.
Regulated, right? So
Manipulated.
calculate that, right? Will taxed or impaired, right? Regulated, right? So calculate that, right? Will the government, the jurisdiction that your property is in, be seized, confiscated, taxed away, impaired away? And the last issue is will be inflated away, right? The reason that Bitcoin is magical is because there's only 21 million. I can create more real estate in New York City. I can create more cars. I can create more luxury watches. I can create more gold. I can create more shares of stock. I can create more bonds. I can create any commodity. They're commodities by definition. Given enough money and time, I can create infinite of any of them. Bitcoin is a scarcity. Okay, name another scarcity in the world, right? And technically, it's not clear there is another scarcity, right? A scarcity is something of which it is absolutely capped. If the price goes up by a factor of 1,000 or 1,000,000, it is absolutely capped. That is not the case with gold, soybeans, silver, stock, bonds, real estate, single-family homes, ships, planes, trains, nothing else. Everything else could be manufactured. And of course, if the price goes up, the incentive to manufacture more will go up, which is why, buying a house isn't necessarily going to be a great store of value in an inflating economy, because you're going to have incentives for someone else to dilute the value of your house. If you do buy a house, better off to buy a house on.
Oh man, that's gonna rub people the wrong way. But what? You're saying buying the house is not good for you're going to give it's going to give people the incentive to inflate it away? Eesh. I mean, me personally, I agree, but I don't know about you guys. Interesting philosophy, eh?
Land than a condo on the 57th floor of a building. And if you do buy it on land, better off to buy it on waterfront property. And if you buy waterfront property, better off to buy it on the beach. And if you buy it on the beach, you're better off to buy it in the most desirable location of affluent, intelligent people for the next 30 years.
I'm sure Pat has something to
Scarce
say about
pristine,
this.
which you talked about, right?
Yeah.
You're better to be at scarce pristine or as close as you can.
And and you can do that for 10, 20, 30 years. That's Palm Beach. That's the Hamptons, right? You can figure that out. Now figure it out for 100 years. This is the problem, right? When you go
But for the
100,
individual, though, who cares for 100 years? The individual. How many individuals think 100 years, though, Michael?
institutions think 100.
Institutions do, but how many? Even some institutional leaders only care about the return they're going to give you for a decade or two. They don't sit there and
Or next
think
quarter.
about 100 years.
I think here's the
I
point,
mean,
though.
that's one of the problems we have with our current political system, even we have in America. The guy who gets elected, he only cares about 2 terms. How much can he really do? It's tough
The
to-
issue is the asset's reflexive. If I told you that you could buy this digital asset and it would lose all of its value in 17 years, then people start to amortize it down. And when it gets to be 12 years old, people start to discount it. It's like you don't want to own a building in London where there's a ground lease that expires in 37 years, right? That's not as valuable as owning the land outright for 1,000 years. So if I told you it's good for 10 years, I think, and the other thing is good for 100 years, everybody wants the thing that's timeless. And the difference is going to create a marginal difference in the price. Let's say it's 2% or 3%. Okay, so all the intelligent money they stampede into the thing that's 2% better. And when they stampede the thing that's 2% better, liquidity is 10x more, and then the money collapses out of the other thing, and it goes to zero. That's why Bitcoin can't.
He's talking a lot like an institution. Remember, he's running an institution. He's probably the CEO of that institution. So I wanted to share that in to understand a whole different way of seeing investing, how he picture it long term. Like to him, a solution that is 37 years old is not good enough. How do you do it for 100 years? And making the steps right now, the same step you're going to keep for the next 100 years. Interesting, right? But if you're talking about building generational wealth, maintaining that purchase power for your next generation, well, that's the type of requirement thinking that it takes to get there, to do it. And interesting. So as you're building your wealth, it's putting that seed in your mind and start thinking about it.
Cash collapses, Bitcoin Satoshi Vision collapses. Anything that's sort of like the same thing but not quite as good will go to zero. That's why YouTube is YouTube. It's like there is a tendency of winner take all in these things, and it does matter, right? Now, you have children, you have grandchildren. right? I never met anybody that said, I kind of want to keep my family generational wealth intact for 12 years, but then I don't care anymore, right? You sort of care. And there's one more element to this. It's not just the ability to know that the asset will hold value 100 years out. It's the portability. If you're living in Nazi Germany in 1932, having portable property versus non-portable property makes a difference. Might make a life or death. There are people that are dead because they couldn't move the property, right? It does make a difference to be able to move it. So you can't blink your eyes and teleport $1 billion of real estate in Los Angeles somewhere else in the world. You can't even move it somewhere else in the country. Being able to move the money from a city to another city, from a state to a state, from a country to a country, and from a counterparty to a different counterparty, all of these things are extraordinarily valuable. They're different to life and death in many cases, and that's what Bitcoin gives you that you don't get with anything else.
Well, I brought up
Again, the question was, what are the risks? They ask him, what are the risks, man? Did I ask you all this? Man, but the way he said it was so convincing, and it's true. For the most part, it is right. It is right. But man, they told him, hey, man, what are the risks? Is there a zero risk? Oh, no, man, you can't say that. As any rational person, any educated person will never say there is zero risk about anything. But from that point on, what he only said was, hey, here's how things are completely effed up. Everything else is you can create more of that except Bitcoin. Bitcoin is the king. Bitcoin. But you're also talking about the property, right? The ability to move your property. Interesting. Right now, I'm kind of trying to set up my accounts in a way that I can free myself of any property so that I can leave the country and then, and move my wealth with me, right? It's a lot easier to do that with cryptocurrencies than it is to do that with money, with land, right? I understand and I agree with him about the digital real estate and Bitcoin network. There's only 21 million of them. If you can own one, this is technically worth of 40,000 right now. Could rise up to 100,000 in the next few years, maybe less. I get it. Now, when we're talking about 100,000, that's just a true land, right? We're talking about like competition with the land. You can buy a land for 100,000, or you could buy a Bitcoin, right? But again, I love that Patrick Bet David challenged him about the risk. But notice how he went on not necessarily a rant, but he went on a tangent and just slightly adjusted and never really touch on it, never really tackle it, the problem. And again, as an investor, you need to think the pros and cons. Extremes in anything is a bad thing. If you two extremes on the negative things, then you're not opening yourself to understand, to see the positivity and the opportunities that could come from it. But if you're too much on the side of opportunity and there's only opportunity, that's all you see, then you don't realize and you don't have an open mind on things that could destroy this opportunity that you think you have. And I'm going to mention one of them. And remember the title of this comment. I mean, this podcast. Why is Biden willing to control Bitcoin at all costs? Right, and it's not just Biden; it's any leaders of a countries, because the sovereignty of their country, Bitcoin is indirectly challenging it. The stronger Bitcoin gets, the weaker the other currencies get, the stronger Bitcoin will get, right? And if people have a different solution and it's easy for them to onboard to this solution, then just like you see, Turkey is trying to take measures and stealing people's car to discourage them from converting depreciating assets, for lack of a better word, into a car that will hold its value longer over time. So your crime, as Mr. Beesdock mentioned in this podcast, your crime is to edge your wealth. That's your crime. Governments can do so much. So going back to the question, what are the risks? We're gonna get into it.
It's on page 4. Bitcoin evangelist Michael Saylor says clear crypto regulations would speed institutional adoption. So CNBC story. Tighter government crypto regulations would actually be a positive catalyst for Bitcoin. MicroStrategy co-founder Michael Saylor says. Additional regulatory.
Depends on what the regulation is.
Well, yeah, that's what I wanted to clarify.
Exactly. Good point, Mister. So now he's talking about that. Him, he's saying that hey, regulation would actually be a very good thing for cryptocurrencies. And you know what? I actually agree with that point to a certain extent because crypto, there is a lot of money. He's going to mention that. I agree with the point that he mentioned, but there is another side to it. My problem with him is he's not looking at the other side. He's not being in the middle and evaluate both ways. So you expose yourself to small things that could make a big difference. And I'm going to tell you. I'm going to tell you what I mentioned, what I see, and the Achilles heel in these thoughts.
It says additional regulatory clarity from the Biden administration is going to benefit Bitcoin and accelerate institutional adoption of that asset. Stressing a major Bitcoin believer and holder, he's looking for clear, bright line definitions of digital property versus a digital security versus a digital currency.
Calling Bitcoin evangelist. Michael Saylor, not savior, by the way. Bitcoin evangelist. He's preaching the gospel. Oh Lord, what's up, Mr. Peter Investor? And thank you for still being here, man. And I noticed you were saying bonsoir, trying to talk your French to She Stole My Thunder, practicing your French. Thank you very much. Very quickly, I'll not to be picky, but I know She Stole My Thunder might get on you for that. So this is the right way to write it. Soir means night. Bon means good. So good night. That's basically what it means. Thank you very much, man, for being here. And let's see. Yeah, you did mention a point here. Unless we all live in a virtual world 100% the time where nothing is tethered to something physical, yeah, I guess. I mean, there is in a virtual world. Actually, Bitcoin is too slow. Bitcoin is too slow for the virtual world, man. It won't work. But there is value to what Bitcoin can offer, especially to our generation, Generation Z. I don't say it's only bad. I'm just saying the way he's an evangelist, so he's only see the good, and that's not necessarily a right way to approach any type of investment. All right. And then there is this obvious thing that he's not seeing that bothers me a bit because he's preaching the gospel, he's encouraging so many people to see it, but he's not mentioning the risk. And there is a huge risk with cryptocurrencies. I'm going to mention it to you, but let's go to it.
And the operating rules of the digital exchange.
You said something. You said there's 250 million people that are pro crypto, right, or pro Bitcoin, but 250 million people.
Probably more after this week.
Okay.
Right? We probably made 200 million fans.
I don't disagree, but I
in
think
Asia
there's,
this
I
week.
think
You say
there's,
because of Ukraine.
yeah, but not just Ukraine, Canada.
true.
There's a lot of different things that's going on. But here's what I would also say, Michael. There's 7.5 billion people in the world that are pro freedom.
Yes.
Except for the people that are pro communism and control. You're underestimating the power. Don't you think? Because we're part of the same party under thinking, but don't you think we're underestimating the power of the few who hate independent thinkers who go make their money and they're sitting around, constantly advancing and questioning them? And in a way, cryptocurrency is a big middle finger to all the politicians, and they don't want to have 250.
Thank you, man. Thank you, Mr. Patrick Bet David. Because remember, guys, he asked a question about the risk. Was it how long did he ask him? He asked him around 1 hour and 5 minutes in, and then he went the whole time not answering the question, only giving positive about Bitcoins, and then around 132, Patrick Bet David re-challenged him again on the risk side, and he's right. The politicians, Mr. Michael Saylor here, is underestimate politicians and their ability to basically go after cryptocurrencies. And that in itself is the huge risk that I notice, which is the flood in his system here. Remember, his own institution, his own financial institution, MicroStrategy, has invested over $4 billion of money in cryptocurrencies. What if people go after that? And by people, I mean government. What if government goes after that? What if they make holding Bitcoin illegal? As an institution, he would have to act on it, whether he has to sell it to the market, right? He's going to have to do something, and that will have severe impact on the market, right? Severe impact on the market, and that's something that can be decided overnight.
Crypto, right, or pro Bitcoin, but 250 million people.
Probably more after this week.
Okay.
Right? We probably made 200 million fans.
I don't disagree, but I
in
think
Asia
there's,
this
I
week.
think
You're saying
there's,
because of Ukraine.
yeah, but not just Ukraine, Canada. There's a lot of different
Hundreds.
things that's going on. But here's what I would also say, Michael. There's 7.5 billion people in the world that are pro freedom, except for the people that are pro communism and control. You're underestimating the power. Don't you think?
And Patrick David mentioned Canada, right? Because of Ukraine, and he said also Canada. Remember, I was making videos about the trucker situation in February, right? After they got they couldn't use the crowdfunding platform, they switched to cryptocurrencies, Bitcoin. Guess what? Guess what the government did? Government did he went talking to the exchanges and say, hey, start blocking people from accessing their accounts. And then guess what? The centralized exchanges, they have to listen to the government to have the rights to operate in their jurisdiction, in their in their geography land. Right in February, guys, within weeks, within days before this podcast was recorded, this actually happened, and he's still not factoring that as a risk. And Patrick Bet David mentioned it. He's being too like he's underestimating the politician's ability to f things up, to go after. And it's not that hard to go after cryptocurrencies. You won't be able to go after the system, but I can go after the people who holds it. And since everything is on a ledger, I can track who owns what, and I can go after their personal name, after everything they owns. And that is happening in Canada right now. Everyone who donated into the cryptocurrency accounts are being investigated and will be investigated for the next 6-8 months. That's how you can go after cryptocurrencies, after people who buy it and hold it. That's how simple, overnight. Emergency Act, they call it. And then now they label you as a terrorist if you donated to a cause that you like, which was freedom. So that's why what Patrick Bet David is saying, especially in the time that he said it, had so much weight. And that's what I'm trying to bring to the conversation that he is not bringing, because he has valid points that I agree with. But as a company, MicroStrategy, if Biden decide to pull the same thing as Justin Trudeau did, that's going to affect you. That's going to affect your investors. And what if they go hard after the US dollar really starts suffering from all the money that was printed? Desperate governments do desperate things. Never underestimate that. And he is. Let's go to it again.
People in the world that are pro freedom, except for the people that are pro communism, that are pro crypto, right, or pro Bitcoin. But 250 million people.
Probably more.
You know.
Clarity from the Biden administration is going to benefit Bitcoin and accelerate institutional adoption of that asset. Stressing a major Bitcoin believer and holder, he's looking for clear, bright line definitions of a digital property versus a digital security versus a digital currency and the operating rules of the digital exchange.
You said something. You said there's 250 million people that are pro crypto, right, or pro Bitcoin, but 250 million people.
Probably more after this week.
Okay.
Right? We probably made 200 million fans.
I don't disagree, but I think
in Asia
there's,
this
I
week.
think
You're saying
there's,
because of Ukraine.
yeah, but not just Ukraine, Canada. There's a lot of different
Hundreds.
things that's going on. But here's what I would also say, Michael. There's 7.5 billion people in the world that are pro freedom,
That's true.
except for the people that are pro communism and control. You're underestimating the power. Don't you think? Because we're part of the same party under thinking, but don't you think we're underestimating the power of the few who hate independent thinkers who go make their money and they're sitting around, constantly advancing and questioning them? And in a way, cryptocurrency is a big middle finger to all the politicians, and they don't want to have 250 million middle fingers, right? So how do you address that part amongst these few that like to control people like you?
It looks like Bitcoin's winning.
Oh,
if we look at what's happening, Bitcoin is spreading everywhere in the world.
It's only been a few years.
Right? I mean, it's the most powerful disruptive force in the decade. Look at the rate at which it's spreading, 0 to 250 million people. And if you turn on CNBC and watch, count the number of minutes that'll go by before you'll see the Bitcoin ticker flip up on the screen or before they'll start talking about it. As far as I can see, the idea of Bitcoin and the idea of digital property and digital money and digital freedom is spreading pretty aggressively, very aggressively. I don't really so much worry about it because, I've met with a lot of people, including a lot of politicians. I think you might find one out of 20 that will be trollish, that'll be negative because they think it gets them attention. But if you speak to most people in private, they all think it's a pretty good idea. I think you probably find a lot of
Yeah, man, this is the naive part of it, man. Oh, governments are being trollish, but if you speak with them in private, they think it's a good idea. Let me tell you, what do you think Justin Trudeau thought it was a good idea when he couldn't block people's, like, there are, like, he was asking, hey, stop them from getting money, and then people were like, well, that's not how it works. Right? Then the only way now they have to do it is go trace on who got the money, but like and talk to the centralized exchange. But again, there are decentralized exchange. You can wire money from a decentralized wallets. Justin Trudeau didn't like that. That we were funding what we thought was freedom, but what he called funding terrorism, because these people were standing for the rights to protest that what governments didn't was doing to them that they didn't like, right? But always like, yeah, governments in private they think it's a cool idea, but it doesn't matter what they think in private. What matters is what they end up doing in public, and what they end up doing in public is Mr. Biden here taking steps towards regulating cryptocurrencies to better understand the risk. Even him is understanding the risks and opportunities, but from his perspective, which is acquiring more power, regulating and controlling the population, not from your perspective, protect your wealth and your freedom. Right? That's what happened. That's the problem with his mindset. It's too in. And again, remember, this is someone who started investing and involving in crypto like later than me. I started looking in crypto in 2017. He started looking in crypto in 2020. And now he's speaking with the level of confidence that is, to be honest with you, a little bit unhealthy, because it's too much sided on one part. He's not opening the room to the potential that he might be wrong in a certain area. And that's dangerous.
A lot of advocates in Russia right now. A lot of advocates. Remember what happened when Putin, or when the Russian bank said they were going to ban it, and all of a sudden they reversed their stance within 24 hours. Right? You see the same thing happening in every single other place in the world. If you look at the Senate and Congress, there's the consensus in Congress right now is very pro crypto, and it's very pro Bitcoin. It's not anti. If you look at the administration is moving forward with guidelines that'll be beneficial to the industry. There is a schism between the institutions and the entrepreneurs, by the way. Like, for example, if JP Morgan can issue a stable coin, then the existing stablecoin issuers would view that as being competitive to them. So there's a lot of tension between institutions and entrepreneurs, and between states and federal government. But I don't think anybody disagrees with the idea that that Bitcoin's here to stay and this is spreading. And so I'm not much worried about it. But look,
yeah, but that's not the question. No one disagreed that Bitcoin is here to stay. But what he's saying is, don't underestimate. That's what Patrick Bet-David is saying. Don't underestimate politicians' ability to go after freedom. And in Canada, we know that very well, because less than a month ago, Justin Trudeau gave us a perfect example of what he's talking about here. So this is why I disagree with Mr. Michael Saylor, because yes, his true passion for cryptocurrencies is admirable. I learned many things from listening to this conversation. Many things. Hence, one of the things I share with you today is ability to see cryptocurrencies not just as economic energy, but how it moves through times and space. I added the factor of time and space into it, seeing it as digital property that you can move anywhere in the world, store those numbers in your memory, and that's all you need. And make sure that you don't get someone to give you a truth serum. Shout out to Peter Investor, where you reveal all your codes and then you lose all your wealth. But with that said, I wanted to bring that to the conversation, guys, because he didn't fully address it, did he? He didn't fully address it, and he's very optimistic. Let's see what he has to say.
okay, you can choose to be pessimistic and say, "Oh yeah, well somebody somewhere will take it away because it's too good an idea." But what are you going to do? Roll over and die?
I don't think it's pessimism. You started your company
Right.
in '89. and you went public in 98. You got a $10 million deal with McDonald's in 92. From 1990 to 96, your company grew at 100% every year, if I'm getting these facts right. You come from an era where Andy Grove was God, and Andy Grove wrote a book where he ran Intel. I think they ran the company at what pace they were growing. He wrote a book called
Michael Saylor should learn from Go. Oh, okay. Game of Thrones, maybe. He should learn from Game of Thrones, Littlefinger's fate. Don't you see that he looks maybe like an older version of him? Don't you think that he looks a little bit like the character that plays him, like a little bit older version? That's an interesting comment. But hey, man, yes, he's very confident, overconfident, and that could lead you. That could lead to a different. It could lead to something that you did not see coming. You did not see coming. But let's see.
Only the paranoid survive.
So
Yeah.
there's a difference between pessimism and paranoia.
Mhm.
The paranoia from a few comes from supporting the cause of crypto. Nobody's sitting there saying, I mean, in so many ways, this makes sense. It's tough to argue this. Who doesn't want to not be controlled by the bank? I can't think of any time where a bank has been the low income, middle income, or the average guy's best friend. Who's ever liked the bank? I don't think anybody's ever liked the bank. The
Mhm.
low to middle income and the rich, unless when the rich was just getting money without, what you're talking about, it's being printed. I'm just, my skepticism is to be a little bit paranoid about what these politicians who sit around wanting their names to be on a bill and a law that can regulate to brag about it. That's the only, paranoia that exists.
And the rational response to that is go educate the world. So if you go to hope.com, Bitcoin is hope. Go to hope.com. There's courses
No.
and books and educational materials on Bitcoin.
That is
If you
not the rational answer to that question. That is a solution that you're proposing. Yes, but it's not going to solve the problem, is it? The problem is, how do you control the government, or do you control the people that you're supposed to elect to maintain your freedom, and they're going to use that to keep you in bondage. All right. But you can try to educate people as possible. But hey, maybe another way to see it is, the more people that are educated in what Bitcoin can do, maybe they can keep the governments accountable. So you see, from that perspective, maybe he has a point. But that's not what he said. He said, yeah, educate them, but for what purpose? But that would have been, if he had mentioned that, that would have showed me that he is thinking about the possibility of governments using it to and banning it and limiting the possibility, but he's not doing that. But I agree. If we're talking about education and how that could help people understand what it is and keeping their government available, absolutely, I would say that's a valid point. But let's listen to see if that's what he said.
go to my website, Saylor.org. We've got a free Bitcoin for Everybody course. We've given it to tens of thousands of people. Why do you think I'm sitting here talking to you today?
But I think it's a level above that, though.
If I was arrogant and presumptuous, I just sit back and wait for the inevitable to take place. But I don't think we can sit back and wait. I think we got to go and speak with every politician, every influencer. We got to reach out to every community. You got to go on television. Go on CNBC, Fox, CNN, Bloomberg, and educate. Look, Bitcoin is the digital transformation of, and we are living through the digital transformation of property, money, and energy. And once you understand this idea, digital transformation of property, money, and energy, you realize that the world's not going to understand that for a decade. I mean, it'll take 10 years, 15, 20 years before people get their hands around what is that. I mean, it's so inconceivable. If you go back 100 years and you look at electricity, how long did it take before people really understood the concept of electric energy? Can't touch it, right, without getting shocked by it, but it was a scary thing. By the way, it was regulated, right? It was regulated, and it took a long time for people to embrace it, and it changed the entire world. The same happened with chemical energy in the form of Standard Oil. It was regulated, took a long time for people to appreciate it. Aviation, air power, nuclear power, all of these things. Digital energy is cyber power. Bitcoin is cyber power, right? The next war will be fought in cyberspace. If you don't master digital energy, you're not going to win it. You can't even defend against it. Most people haven't even figured this out right now, that digital energy is critical. But even I got a lot of Twitter followers. When I post on Twitter, only about a third of my followers understand what digital energy is, right? They don't really get the idea. We have created a file which we can move at the speed of light on a layer 2 or layer 3 network, on an Apple Pay network or a WhatsApp network or any website that moves energy in a conservative fashion through cyberspace for the first time in human history. That's a profound idea. They don't get it, right? If I have a digital music file and I send it to you and you run it through your headphones or you run it through a speaker, you can listen to music. If I take away the computer and I take away the headphones, is it still digital music? Sure, it is a digital music file, but you need to actually decode it and run it through a speaker with electricity for it to be digital music. That's profound. If I have a file as digital energy and it holds $1 billion in it, and I send it to you in Tokyo, and you run it through that decoder, and then you go and you buy $1 billion of electricity, or $1 billion worth of weapons, or $1 billion worth of buildings, I have moved digital energy through cyberspace. I have to decode it. It's a big idea. We never did it before. Right? It's like putting something in orbit, right? Everything's ballistic until it finally hits escape velocity, and then it orbits the Earth forever. And orbiting forever in orbit is a pretty big idea. That's what's going on here. It'll take a while for people to figure it out. We got to educate them.
So that's I like that point about education. I think the other part would be
Yeah, it's gonna. I get it, right? Again, I did give you my thoughts, my answer. That's not what he's saying. He's just educating people. For what purpose, we don't know. But I agree with educating people in a grand scheme of things. It's definitely the best way to go. But if we're talking specifically about addressing the risk of cryptocurrencies and how government can regulate that, education can help. But it's for the purpose of keeping people accountable, right? If he had mentioned that, I would agree with him, but he didn't mention that. He just said educating people, educating people. Maybe they're too dumb, right? Maybe they don't know. They didn't say they're too dumb. Maybe they just don't know how it works. Maybe if they knew, they would change. They would act differently. But that's not true. The incentive for the government is not necessarily to learn how crypto works. It's more like make sure the cryptocurrency doesn't undermine their power. And crypto, and like you mentioned, is middle finger to everyone, to everyone, yeah, to everyone in power right now, because it takes the power away from the banks, from federal reserves, from the world reserve currency, and that's a problem. That's going to affect the U.S. ability to maintain that, especially as they print more money to tackle the war, right? So that's basically all I wanted to talk about today. Let's see if you have any other comments, guys. Make sure you hit the like button. Let's see input and output. Yeah, he's thinking very much like an engineer. Engineers do think inputs and outputs. But yes, guys, in a nutshell, we talk about what is cryptocurrencies from the perspective of Michael Saylor, very smart man. And yes, guys, he brought up a level of an insight on cryptocurrencies that we don't normally hear. How do you think about cryptocurrencies, especially bitcoins, as property, digital property, with the ability to move into space and times at light speed, right? So, light speed, the ability to move in and we never had this level of power in our culture, human history before, but now we do. But this power is a tool. This technology is a tool. It can be used for good. It can be used for bad. It can be used for a way to free us. It could also be used as a way to slave us. And governments, they seems to have, they love obedient people. They love obedient people, and that could be used as a way to keep us in how do you call it, to keep us in check. And that's where governments, when I hear Biden is going to evaluate the benefits of cryptocurrencies, I gotta ask myself, what is the benefit from the government perspective? And then when they say they're going to evaluate the risk, I gotta ask myself, what is the risk from the government perspective? And the risk is the more people are joining this, the less people are going to use the US dollars. It's going to limit our ability to maintain our power around the world. This is bad for business. They're going to tackle it. They're going to regulate it. They might make it illegal, just like it was illegal to hold gold at some point. Why was it illegal to hold gold at some point? Because they needed more money to go to war. So they seize money, and then they use that money to pay for whatever they need to pay. And it's not just US who did that. Many other countries did that. Seize gold, seize wealth. So it might be a scenario where if they can't seize it, they'll make it illegal to hold it, illegal to exchange it for fiat currencies. And if all the doors, you need fiat currency to operate in this world, well, regardless of how many crypto you have, if you can't convert it back to fiat, For now, in the short term, it's useless then until we build an entire economy where the currency, the base currency, is not fiat, is based on cryptocurrencies, and that we can do. I was talking about someone just this morning about this idea alone. But my next video, guys, is going to be about it's not just about making money, it's about also keep money, multiply money, but for what purpose, right? What is the purpose of doing all that? You could say some of it could be to make generational wealth, to maintain as much frontier as possible, but some of it could also be to give to other people, right? It's not just about holding and storing all that money for you. You can also give more. The more money you make, the more money you can give. And sometimes I argue that the world would be a better place if people made more money. So I'm going to be talking about that maybe on my next podcast Wednesday. We're going to talk about that. So make sure you tune in. And with that said, let me go through very quickly on the chat before I wrap up. Peter Investor M, Ben David is a greater interviewer. Ben David, okay, I'll check him out. I don't know. I don't know Ben David, but I like Patrick Ben David. I think he's very entertaining. And yes, I've been following him for a while. I wouldn't say he's a greater. I love him a lot. But hey, I mean, when I say I love him, I like his interview style a lot. But yes, I'll check him out too. Maybe there's things that I like about Ben David as well, or maybe I'll love his guest, what they have to say about it. If you can get the best out of your guest, and yes, but I like how Patrick Bet David tried to challenge him, and in a way that I don't see him being challenged like that online, right? And that was needed. President wants to regulate and deregulate assets, digital ownership. Absolutely. Give to the system. No, I wouldn't say give to the system. I would say give to people that can actually make better use of it. Foundations. Some foundations are run by genuine people that are here to make changes. And then as you do your research in foundation, it's very important to see where the money goes, to understand where the money goes, to see the results. And the bigger the corporation, the harder it is for them to adopt. It seems like the bigger the corporation, the less efficient they are. So that's things like that too. But me, I like to donate a lot. I always think about donation. I would like to one day run my own foundation for homeless people. I care a lot about homeless people. But I leave in the descriptions of my channel links to foundation that I care about. But next Wednesday, I'm going to invite someone on a panel, a friend of mine who's been doing great jobs about running foundation. So it's not just about stacking money, making money, keeping money, and multiplying money, but it's for what cause, what purpose. Some of that purpose can be to maintain your family's wealth, but the more money you make, the more money you can give, and the more money you can help share around the world to make the world a better place. It could be a country, it could be your community, it could be the world, who knows. Wherever your money can reach, it could help someone, right? I wouldn't say it gives you more purpose to make more money, right? It makes money more fun, not just for a greed perspective, but to go out there and share it with others. So that will be the topic for my next podcast Wednesday. So make sure you tune in for that, and let's get into it. With that said, guys, thank you for your time tonight. I know it's very late, but some of you stayed the whole night with me. Truly appreciate it, and please share these streams so that more people could be exposed to the knowledge, or write a comment or help in any way you can. Type a comment after the video is posted. And I love the interaction that all you guys were able to do tonight. But with that said, guys, we'll see on the next video.
Hey, yeah, it's all about wealth engineering. Might be something that you're not used to. It's okay, cause I'm here to introduce you to concepts, time to grow and make big moves. All about crypto, come see. Stocks in business, yes indeed. Got the info that you need. Hosted by my homie JC. Hey, yeah, wealth engineering, stacking and stacking it up. It's time to generate